Hello and welcome to another episode of Nothing Ventured with me, Aria. On today's episode, I am super excited to have with me in the studio Rupa Poppat. Rupa is the founder and managing partner of award-winning venture capital firm Araya Ventures. Araya invests in early-stage startups across health, fintech, future of work, and commerce, with over 65% of investments in AI application companies. Their debut fund is the $26 million Super Angel Fund, backed by the British Business Bank, which has made 23 investments to date. And their latest $30 million global fund has made 2 investments to date as well. Rupa is also the founder of House of Araya, the end-to-end co-investment ecosystem that provides deal access, insights, and learning to a global community of angel investors. Through the House of Araya, Rupa has supported over 400 angels in the UK, Dubai, Riyadh, LA, Singapore, Toronto, and New York to access the venture asset class. Araya Ventures was awarded 2025 Best New Fund Manager at the EISA Enterprise Investment Scheme Association Awards and recognized as Pre-Seed and Seed Investment Firm of the Year 2025 UK at the Investment Excellence Awards in 2025. In today's episode, we talk about how the AI application ecosystem is moving fast.
Product market fit is no longer a given.
Why you have to earn product market fit every 3 months.
Our startups need to really earn product market fit, a regular basis.
How venture is a founder-first play.
Like anything in venture, it's a founder-first play, right?
Building a co-investment ecosystem at House of Araya.
A lot of people after the academy were like, so how can we look at deals that you're doing? And so now it's a whole co-investment ecosystem.
Building 3 funds in less than 2 years.
Sometimes it feels like I'm on a roller coaster that just keeps going higher and higher.
How to see something that others don't, and why anyone can be an investor.
Anyone can be an investor.
Let's get straight into it. Hey guys, whilst I've got you for a second, I thought I'd reintroduce myself. My name's Arish. I am the host of Nothing Venture, the podcast where I talk to the people behind the stories that make the venture ecosystem go round. I'm also the founder of Emerge One, a consultancy that provides fractional CFO support to venture-backed tech startups from seed to Series B and beyond. If you enjoy the podcast, I'd really appreciate it if you could like and subscribe wherever you listen. And if you ever want to have a chat, do reach out to me on LinkedIn or on X. I'm always up for a bit of a natter. Right, let's get straight back into it. Rupa, really great to have you in the studio. I think we've been noodling on trying to get this done for a while, but I know you've been out there busy building up these funds. Not even a fund, which is pretty incredible. Let's dive straight in. You allocate over 65% of Araya's portfolio to AI application companies and write 150 to 450,000 pound checks into pre-seed and seed across health, fintech, commerce, and the future of work. Where does an AI first thesis misfire? Like, what are the costs you accept when it does, and what failure modes do you rule out?
Yeah, great question. So look, I think one of the first things with AI application market is that it's moving at speed, right? So product market fit is no longer a given, like in the traditional sense in the way that we used to know it. And the way we think about it is that our startups need to really earn product market fit, a regular basis, but as often as every 3 months, depending on what else is going on, what the competition are launching and what's happening in the wider market. We're also in a market where, competition has gone global from day one. Traditionally, you went to a market, you lived in that market, you built the product, you reached product market fit, you went out to raise some money and you started expansion. Today is very, very different. And, we're seeing that in the earliest of companies where they already have, brilliant distribution in like Europe, but then also in the GCC, and the way that, people are building is just, it's completely like, it's actually incredible.
Distribution has flattened completely.
It's just incredible to see like the way that these businesses are being built. I think the other thing that's really exciting is that it was never a plan of ours, but we're seeing more second and third time founders than ever before come back to build, because it's such an exciting moment in history. At the same time, your question was the other way, but one of them I would say is like, what is real signal and what is noise when you can't rely on product market fit, when you're assessing things at scale. So if you imagine that commercial to product data loop that happens in an early stage startup as you're working towards PMF, like you've got all of a sudden now signals coming from users, but the users are still learning what they're going to need in the next iteration. So that's not even a given. So you've got data points coming in that the commercial founding team or core team are then relaying within the startup to product. And then that's being fed into the development of that product. And so you have to, like, as much as you can look at how that loop works, who are the team that are doing that, how do they have a decision-making framework, there is an element there that you won't know until it really gets into execution, that they're understanding the right signals and developing them into the product. And some of these startups, Lovable's a great example, like they're shipping out every single week. So if you think about the scale and the scale at which these startups need to be shipping, they also need to be digesting what their users want before that, right? And so I think that's an element that you have to be really aware of, that there's going to be some of that. And I think the other thing that we really try really hard to make sure is that the companies that we're investing in, we have to truly believe they won't be a feature. They have to be a product in their own right. And that means embedding into workflows, having data flywheel loops, having learning loops within all of those sorts of things. But ultimately, I think the biggest lesson for me coming into 2026 is that nothing else matters without distribution and having a distribution moat. So it's not good enough anymore to have the same distribution as someone else building in the same sort of space as you. It's about having something that's unique to you, that's loved by your customers. And we're spending a lot of time this year with our companies focusing on storytelling, narrative, distribution moats, how to think about building that around themselves so that they have a defensible strategy into this next phase.
Yeah, there's a couple of things. I mean, so I've talked about it a few times now on the pod. I think the three moats that are going to persist, certainly for the time being, are distribution, proprietary data, or hardware, right? Like capital is no longer a moat, right? You can go out and raise capital, or you don't even need to raise capital potentially either to build, right?
Exactly.
Marketing is no longer like a moat in and of itself. And again, that would be driven by capital. Software is absolutely not a moat.
No.
So all of those things, I think apps and distribution is obviously core to all of that. And I think the other thing that is super interesting in what you said is, in a world where you can build anything, right? And you literally can. Like, I built something last night, which had, it was a brain moment, like brain fart or whatever you want to call it. I was like, okay, how do I let me figure out how to do this? Did it. And this morning it was up and running. I was still wrong, but it's fixable. And then, the problem becomes, like, as a founder, how do you focus down on really what is essential to your product, and to your point, product, not feature, and stop yourself from just over-egging the pie and trying to build like everything that is possible, because you can, right?
Yeah.
So how are you seeing founders approach that? Are they just out there kind of in exploratory mode, or have they actually used these tools, or are now building these tools to actually just really create deep niches in either a vertical or a specific sector?
So it has to be vertical. It's got to be something that the general models or the large organizations can't get to. And it's because it's about speed as much as this next stage, right? So it has to be vertical. And then going back to what I said earlier, it has to be a huge enough problem. So who gets disintermediated? How much saving of time or money does it cost? Does it impact? And if either of those can be done on mass scale, you've got something that's going to be useful for someone. But ultimately, nothing's changed from before in the traditional sense. You need to have a user that's willing to pay for a product.
Yeah, sure.
The reality is that because of what's come our way, there's just a huge opportunity to disrupt every single thing that we do. So if you think about every incumbent business, every big problem statement, and think about how do we apply like an AI solution to that, that's, I think, what is really interesting right now. So I think that's why we've got inundated with opportunities in the market, because some of the best founders who've built before, as well as new founders, as really senior operators, are all coming back to market to build. Like one of the deals we just got allocation in, I mean, they were part of a business that, grew to over 10 billion valuation in Europe. And we've got into their next deal. And those are perfect examples of people coming out to build right now because of this moment is a really special time. And I think that's what makes it so exciting.
Yeah, I feel like, there's never been a better time to build and explore, because you can actually get quite far without raising capital. And if you get far enough that, something clicks and it makes sense, that's the point at which you can go out and raise. And I think, obviously your point around whether these foundational models can essentially, it's the same question everyone used to ask, like, couldn't Google just build this? Whereas today it's like, couldn't OpenAI or couldn't Anthropic build this? And the point is they probably can, but if you are niche enough, then, it's either, they're going to have a generalized model where, argument's sake, in finance, finance guy can go in and, build a spreadsheet. But if you can actually, but I think this is a really awful example because having been here myself, it's not great. But, I guess my question is, how do you therefore, especially at pre-seed, really filter? Because yes, I appreciate market has to be there, moat has to be there, distribution has to be there, etc. But I would assume, if previously as a VC you were seeing 3,000 sort of decks a year, that may have increased several fold, right? It may have doubled, it may have tripled, whatever, right? So how therefore do you really filter, especially at that early stage, on those opportunities that really look feasible?
Yeah, no, look, really great questions. I think first of all, you got to think about, I know we talked about distribution, but sometimes it might be that there's a distribution moat before the product's even ready to monetize. Sure. So I think obviously that's a really nice one to have. And I think the other second thing is like anything in venture, it's a founder first play, right? And I mean that even more so. So for example, some of the companies that we've backed pre-seed in this space, we've done more referencing around the founder or the chief product officer and who they worked with before, other CTOs they worked with in their previous operations, looking at that dynamic between, the tension between a CTO and a CPO, but also looking at what they thought their strengths were and understanding will they be able to build that user experience, that delightful experience that's also part of building, an AI application today, and whether that's got network effects, user collaboration, whatever it is within the features of the product that then help it compound in value as well. And so we're really looking at who's building, and that's always been the case. Founders are, ever important, but I would say that's even more so now. So
it's that execution ability rather than risk.
And one of the things we do overweight on now is founders having worked together before, even if it's as an operators, not necessarily as founders. But about 45% of our portfolio at the moment is second or third time founders, and that's not as high. It's much higher than I ever expected it to be. But it's a natural, I think, driven by where the market is right now.
Yeah, I would expect that, right? Because certainly, founders that have, and it'd be interesting to see how many of those were founders that have built and exited versus founders who had not quite made it through previously. Yeah. But as someone who has built a couple of businesses, one of them I had to close down last year, but that itch is still within me, right? And now I have the tools and the ability to do things that I couldn't have done in the past. And therefore I think, I can imagine lots of founders are out there going, wow, okay, if I'm not building now, what am I doing? Right? Yeah. I think that's probably the thing that's going through their heads.
Yeah.
So also, why are you not building again, Rupa? That's
well, I've joined the other side now. But I absolutely agree with that. And I think it doesn't have to have been a hugely successful exit for a founder, not to come back. I think is absolutely the moment, if there was ever a moment to come in. But I also think the same way on venture, it's absolutely a moment. So if I think about, our ambitions to deliver, essentially all we are we're middle men, middle women. We have on one side, we get given capital, we have to distribute it well. We have to then hopefully add some value to the people we've distributed it to that results in something that comes back and then goes back out again on multiples of what we said. And that's essentially, that's who we are.
Venture in a nutshell.
Yeah. And I think ultimately, in this market, there are huge opportunities for earlier exits than ever before. Huge growth. If you think about the growth of the M&A buying groups right now, if you think about consulting firms, you think about accounting firms, you think about...
Oh, they are massively acquisitive right now.
So many. You think about even the way the LLMs are doing acquisitions, having these large $100 million plus acquisitions without needing Series A, Series B, Series C, and having your future dilutions as well. And with very, very small teams, these acquisitions are already happening. But if I was, the way our thesis is very much built is that that's only going to increase. And, even two of our companies that we backed last year, they're both, have been approached for acquisition already. Wow. And you think, well, they've done well. Yes. But the numbers aren't necessarily in line with how you would traditionally value a company because there's other factors that come in, which could be how long would it take that company to get that capability?
Sure.
How long would it take? What would they lose in that 2-year or 18-month process to build that internally and things like that? So I think it's just very, or in one case, it's a proprietary data play.
Yeah.
It's
that mode again. Yeah.
I think that we're going to see a way more multitude of acquisitions taking place and not necessarily always waiting for these unicorn valuations, but having really good outcomes without the dilution. So still really good outcomes, but much shorter time frame, because also us distributing that money back to our investors in a shorter time frame is also part of our jobs as well, to keep our IRR high. So our returns high for our investors. So it's time and amount. So if I think this market for investors offers a really unique opportunity to really make moment of this next kind of 3 to 5 year period.
Yeah, especially as DPI has been kind of at an all-time low over the last sort of 4 or 5 years, or sorry, amongst funds that were raised maybe 5-6 years ago. So, you know, that speed of return is and this is what I was saying to you earlier, right? Like you can build now a really robust business and get to those kind of numbers where you can exit for a meaningful amount that is meaningful both for the founder as well as for investors. Because often in the past, what was meaningful for the founders wasn't necessarily meaningful enough for investors, right? And that's where you have stories of founders like trying to shoot for the $1 billion and actually never making it, but they could have exited for 150, let's say, or 200 in the past. But if you're doing that, if you're coming in at pre-seed on a 10 million valuation or whatever, and in a year's time they get acquired for 150 million, that's a pretty damn good outcome for you, right? Because you haven't had the dilution risk in the middle, et cetera, et cetera.
And also for the founders, right?
100%.
Ultimately, it's about the founders, it's about the customers they're building for. And we get to just be those people that get to distribute it back.
Yeah, amazing. I mean, I think, look, I think there's a huge amount of opportunity. I think equally, I think there's an element of, certainly within venture, I think investors trying to figure out where they fit in. And I think there may be a bit of consolidation happening in the market, or will happen in the market, I think, over time. Because I think the pace of investment has changed. I think the outcomes have changed. I think also, where you invest and how you invest has necessarily had to change. So let's talk about that a little bit as well, because you began as a solo GP kind of super angel, took a first close of close to 11 million, and then brought in the British Business Bank for a second close and launched your global fund. So when scaling forces you to add partners, which you give up, like decision speed and founder intimacy, or governance and reporting, and why? Because I know that you've built these funds essentially over 12, 18 months? Like it's been an incredibly fast-paced journey.
Yeah, I started in 2024.
Wow, okay.
Yeah. So
and we're recording this March 26th. Yeah. Okay.
Yeah. So it's been a really, sometimes it feels like I'm on a roller coaster that just keeps going higher and higher, waiting for the bit down. Look, I think it's definitely been a different journey. Even we were remarking at Christmas. So the Christmas before, it was just myself, and we had 2 fractional members of the team. And this year we have 15 people sitting around the table. Wow. And so I think that has just been absolutely incredible experience. Obviously, on top of the funds, we have House of Araya as well, which is like our angel investment, co-investment ecosystem.
An academy as well.
It's, very much started as an academy to democratize access to angel investing. We've got almost 400 graduates, but we've just now moved it into developed it further into House of Araya. Because a lot of people after the academy were like, so how can we look at deals that you're doing? And so now it's a whole co-investment ecosystem. So it's like, there's even AI frameworks in there, modules. There's like scoring cards, portfolio construction tools, calculators, a whole toolkit on top of the academy. And then there's a community across different cities of co-investors, and there's like an online, kind of peer group. And then we take like 8 to 12 deals a year from the funds that go into accessible by members of the House of Araya community. So we were looking at very much how to like extend the academy into a lot more. And people kept asking us, how do we meet our cohort again? And we kind of didn't really have that. So this is kind of bringing that to life in a bigger way. So that's how we got to 15 people. I think going back to your question, I think that one of the hardest, I guess, things is going from, you'll know it, from 1 to 5 to 10 is, making sure that even though if you're building at scale, there's culture is being built as well. who do you want to be out to the market? There's an element of I've gone through the founder journey. So there's an element of empathy that comes with my approach to investing. And I think what I've learned is that as a team, we're now 7 across investments. Everybody comes with their own superpower, I would call it. And so just integrating beyond, I mean, I absolutely love it because I feel like we 5x what we can offer now. We've got these venture partners, we've got this team who've all got incredible expertise from Silicon Valley, from sitting on ICs of other funds. We've just, been 20 years in private equity. So we've got just a phenomenal team and everyone's got their thing that they do. And we're really trying to hone in. It's really enjoyable doing these onboarding calls after we've backed the founders to say, well, come to me for this and then come to me for this. And then seeing how that shapes the whole picture as well. But I definitely think, growing at such pace and, with people, culture, all of those sorts of things, that's definitely something that we had to give up on. The other benefit for me was when I gave up operations, because when I did the first closes, I onboarded every single investor myself from start to finish, execute every deal from start to finish.
That's painful.
And I think that's definitely one of the but also like everybody has their superpower, and so the lady that's come in to run that for us, that's her super. She's really she sees things in a way that needs to be seen. And so I think you come together as a group and understanding what everybody brings and then like putting that back out to the world, because venture is becoming very much about being a media brand today. It's very much about who are you? How do you represent? At the beginning, we used to get asked for like references. Now, a lot of the founders know other founders in our portfolio, and things start to evolve, or they've heard about us, or they've had a recommendation, and but that takes time to compound as well, right? And so now we're getting into these incredible deals by showing some of our value beforehand as well, and then saying this, there'll be more of this later as well. And so I think understanding what founders want, and then understanding how we want to show up together as a collective, rather than just me on LinkedIn putting messages out.
Which is getting like LinkedIn has just become like it's a swamp at the moment. Like it's like it's not only is it hard to stand out, but it's like, would you actually want to stand out there anyway? Right, that's tough.
Well, I think I think this going back to like even podcasts, like everyone, like you have to have an edge in this. We talk about distribution. It's no different as a venture firm. You have to stand for stuff, and you have to be able to put that out to your founders in a way that creates alignment as well, creates values that come together as well. And so I think that's definitely been, I guess, the journey that we've been on together, is to figure out who we are as a more broader collective.
What strikes me the most is, a lot of founders often misunderstand how venture firms are built, right? And especially as an emerging manager, you are basically building a startup, right? Like ultimately, it's no different. You have to go out, raise capital, you have to build operations, you've got to build team, you've got to build processes, and then you've got to make those work. And obviously you've got to do it in a way where feedback loops, and I had this conversation with multiple VCs, your feedback loops are far longer than a startup, right? In a startup, you send the product out to market, customer gives you feedback, you adjust, etc. Right?
Yeah.
As a VC, you invest, you may not know your success rate for another 5-6 years, right? And I think like as you've been a founder in the past, you understand intrinsically what it means to build a business. We also know that in Europe, again, much touted metric, sort of 6% of VCs have been operators versus 60% in the US, right? And that delta seems to show itself up quite often. I think the mere fact that you understand that journey and therefore understand how to build the firm as a business, which is exactly what you essentially said to me just then, it is super important, because if it is a fragmented ecosystem of kind of individuals just doing their own thing, then to your point, you don't stand for something. Like if I'm looking for investment and I try and figure out what Araya is doing, like I'd be mystified. Whereas, if you've coalesced around, a proposition, but also with your individual talents, that makes it a lot easier.
Yeah. Yeah. And I think there's going to be a lot more coming from us soon. Like we're planning a lot of kind of who we want to be out to founders, and that's ultimately our audience.
Yeah.
And so we've been thinking, we're ready to start launching a couple of initiatives, but we're really clear that that's who we serve essentially, and that that's really where we need to kind of make sure that we're delivering value, delivering alignment as well.
Yeah. I mean, it also feels like you've leaned very heavily into your kind of founding journey, right? Because you built another community, right? And I know you've done lots of stuff with Emmy Faust, who's been on the podcast in the past as well. And you talked about it, right? Like you built an angel academy in House Araya, which has supported, as you said, more than 400 angels across London, Dubai, Riyadh, LA, Singapore, Toronto, and New York, and channels graduates into deal flow and carry. But when does leaning on that community become a source of signaling risk or low quality deal flow, right? And what processes are you willing to impose that will shrink reach but raise discipline? I guess, like, fundamentally, the question is, are you sending all of your deals to these angels? You said, I think it's only 8 to 12 or something along those lines. And how do you pick those? Is it based on the allocation available? Is it based on what you think is most appropriate? And was it fun building another community?
Yeah.
Do you have PTSD?
Yeah, definitely. And also, look, I'm really fortunate you asked about, like, where's more partners come in, but I have an incredible partner in House of Araya, a gentleman called Aria, who has built community at mass scale before and other businesses. And so it's really refreshing to do it in a very different way to how I did it before in my previous innings. And I think the academy was great. The feedback was incredible. We had people come back for the course the year after and things like that. We had like all of the signals that, we had companies ordering more of the courses. We had all of those signals, but the community wasn't there because there was nothing other than them potentially sending us deal flow afterwards. There was nothing ongoing. And so this is really about creating an ecosystem where you learn, you co-invest. Group due diligence is one of the most, it increases your chance of success in venture, right? And we do it in the firm side when we're picking, because we've got experts, we've got customers to reference with, we've got venture partners, we've got each other as a team with all of our collective experiences, so we've got all of that. And in the same way, like, why should an angel investor solo invest on their own? The most powerful is as a group. And I've seen it on the courses. We have these like live case studies, and there was one where we had a health business where they practiced the frameworks in a real life scenario. And you had like a politician in the room, like a McKinsey consultant in the room, a TikTok creator, an entrepreneur, and a doctor. And all of a sudden, like, the doctor's talking about clinical trial efficacy, the politician's talking about mass, like, scale. How do you get this out? The TikTok creators, like, what's your customer acquisition cost? What's your average order value? All of these sorts of things. And as you see what everybody brings to that collective, the power of that is way more valuable to an angel than solo investing, or just solo investing with a small group of people that you already know. And so what we're trying to do is bring that on mass scale. And the other thing is that after the courses, people would ask, how do we access Araya? And then they would say, can we invest in your funds? But that was never, the courses weren't about getting more investors into funds. They were about democratizing access to people who weren't investing before. And not only not investing before, we had people coming on the courses who were like, oh my God, I started 8 years ago and I wish I'd done this course 8 years ago. Now when I look at what House of Araya, like, the team have built there, like, or we've built, I'm like, I wish I had this when I started. And so, like, it compounds the chance of success in this power law game is having access to deals, is having access to the learnings, because I don't know about you, but a lot of angels like myself, I mean, luckily my first ever investment did exit, but my second, third, fourth, fifth did come very quick in succession, because once you get started, you build up this, and so not having a framework or portfolio construction discipline from the beginning, because it wasn't there. And so I think,
well, you end up investing in what excites you, interests you, etc. But you're not necessarily thinking about, okay, is this going to work? You're not looking at it necessarily as an angel from a purely sort of financial return perspective. Obviously that will be on your mind, but often it comes down to gut and instinct and do I think I can help and so on and so forth. And then, I've had it, my first investment went to zero within about 12 months, right? My second one probably, within about 3 months, if I'm not mistaken. And then I've got 3 that are, just kind of kicking along, and I haven't been able to kind of expand from there. And part of that, I would say, is because I don't have the time, exactly as you said, to necessarily sit there and scrutinize the deals that come across my table on my own, because I get hundreds, and so many of them now are just these like AI kind of emails that just come out and just do my head in.
How many do you get which are like, week on week growth? We launched 6 weeks ago. Week on week growth is like X%.
Every single one. But it's the thing that really annoys me at the moment is this like asking for permission to send me a deck? Like if you are raising, send me a deck. If you like, don't try and send me an email to capture me in your loop. But the point is like, and you and I sit on a couple of, WhatsApp groups with other angels and so on. And that collective knowledge institutionalized as you have in House of Araya is exactly, I think, what's required. And sadly, too many kind of angel groups, and there's, many in the UK, kind of talk the talk, but they don't really walk the walk.
Yeah.
And there's a lot of kind of tire kicking as opposed to actual deployment. And it sounds like you've managed to fix that.
So what we did is we said 0 fees and SPV on the way in. As once you're a member at House of Araya, and that was really to just make sure every penny goes into the founder's business. And then on the other side, you asked about how we pick deals. So we are tracking quite all of our companies. We're working with them. We're adding. So we not only did we back them once with capital, we're also working with them since backing them with capital. So we know what's going on. So for example, one of the first deals that we're taking into the house, I know that there is a Series A being worked on towards the end of the year. So I'm also tracking that actually giving allocation now could be a really good result for our angels as well. And then it's up to them if they want to invest in that deal or not. They'll get the option, but it was really to create more of a fully serviced offering, take Academy and kind of, I guess, Academy on steroids, I'd say.
Yeah. And does the community or does the Academy or the angels, do they equally send deal flow your way? So you asked about that as well. So we have done 2 deals that have come from Academy graduates across the fund, which is great. I think as the value compounds, that will absolutely compound. I also think that angels will meet in the ecosystem, and they will go off to do deals together that aren't in our ecosystem. And that's also cool. We're not a closed end. We're just trying to we just want to bring more people in, and we want to open the doors to access to deals that might not be available for angels or might not be accessible in that way. So that's really what it's about. It's very clear that community as a moat within venture and within the startup ecosystem is super important, right? Like, if you can build that community, you have on the venture side, you have access to deal flow, you have access to talent, you have access to interest, right? And that's the reality, right? Like, so you may well find, I guess, out of the investments that you're making, we're looking for a CPO, we're looking for a chief of staff, we're looking for X, Y, Z, whatever that role is. And it may well be that within the 400 plus people in your community, there are the right people to kind of say, well, they need someone, to your point.
I mean, that's a great idea. We haven't got there yet, but actually that is a great, because funny enough, I'm laughing because we always tell founders on onboarding that we do all these things, but we're not the talent. Because a lot of funds do talent
partner. Yeah.
So we're always like,
I'm not convinced all of them are, but
I was like, go to your other funds for the talent, because that's not. That's just like, we want to be honest about where because like literally we invested in this incredible company. They did really well the week of our investment, and then they messaged us saying we're hiring these people, and I was like. And actually, I knew a few people personally, but it's just not something that we've done a lot of. And so I just wanted to be honest about where these are the things we can help you with, or I think we can help move the needle for you. I don't think, we can give you these few people if you're interested, but I don't think it's going to be the core thing. And so we just want to be really honest as well, and just like really like add value where we can.
I got to be honest. I know lots of these sort of platform teams, and I think there's variations on success, I think is the best way I would put it. But I was thinking more even along the lines of, like you mentioned, politician, doctor, etc. Right? Like, you've got a startup that is, nudging on regulatory requirements. Like, it could be quite useful to have just a conversation with a politician, like offline or whatever, not necessarily formal, but just, hey, like, what would be the best route in to figure out X, Y, or Z?
And how we've done that. So we've done a few things. One is we have a founder masterclass every 2 weeks, and we bring these, like, the people that we want our founder community to get to know, and they run a session on their topic of expertise. So and then that gets recorded, and then it gets put in the resource hub if the founders can't make the session. So they've got the whole syllabus since last year of all the classes that take place. So that's happening anyway. Then on top of that, what we found is, like, we did the first one was on go-to-market with one of our investors who'd gone off to scale like to 400 million ARR as a chief revenue officer, talking about how do you hire your early sales teams and so on. And then they just reached out directly, and founders got in touch with her and so on. And that just happened organically.
Yeah.
The other route we're doing is that there's actual investors in our community of Super Angel Fund that are saying, like one is a C-suite. He's starting somewhere else in 3 months. He had 3 months and he said, no, I'm here.
I mean, yeah.
Can I do anything?
Like
so
office hours
he
or
helped
whatever.
like change lab pricing in one of our longevity startups. He helped one of the other startups figure out what to do with a part of their proposition that wasn't performing as well while the other one was scaling crazy. And so he actually he's just an expert in enterprise at C-suite and was able to, so we just like, let me say pimp. We send them out. We pimp them out. No, we send out the details to the founders and say, if anyone wants a session, this person's available. And funny enough, it was just one of our investors, a doctor, caught up with her yesterday, and we've just agreed to do exactly the same with her because she's an expert in, and quite a few of our health companies have things going on with the NHS, and she could really help them think through that proposition. So we literally, that's how exactly how we're thinking is how do we compound the value of our community and our network and the people that have already come on the journey with us that also own stakes in these companies and bring them more to the forefront. Because again, talking about middle, it's always been, the LPs that are like sit quietly and waiting, patiently, hopefully, waiting for those returns. And then, us like supporting the founders. But I think if you can bring that together, it becomes even more powerful.
Yeah.
Right?
Again, it all stacks on itself, right? Like, and to your point, it compounds. I mean, I've done quite a few of these sort of things for venture firms as well, right? Like where I've just said, if your founders have a problem in finance, let's just do a one-on-one and I'll workshop with it. And it's really interesting because they'll start off with like, oh, what are the metrics I need in my Series B model? And actually we go into, what's your acquisition strategy and how do you present that to the next VC that you're going to be pitching? And actually, do you need to reshape your team or are there any gaps? The thing is, once founders have someone that they can speak to completely, I guess not completely external, but external enough that they can be just open. Like, when they're sitting talking and there is an investor in the room, they're going to be slightly more guarded. Whereas I think if they know that, this is just a session where I can essentially get a bit of therapy on a specific issue, it's that much easier, right? And yeah, look, I think those sort of things are massively valuable. And I think, especially given how fractional the world has become, like there are so many people out there that can kind of offer these. I want to go a little bit off script just before we close off, because I was thinking about this as well, right? So, you've built sort of 3 funds, as it were. The reality of fund mechanics, is that smaller funds obviously lower fees. You are building quite a large ecosystem. What's the ambition? Do you see Araya becoming a lot? Like, do you see you scaling up the fund size, or do you think like operating with a relatively small niche pre-seed kind of fund is where you prefer to sit? I'd really love to understand kind of what your thoughts are on that.
Yeah, a great question. Always things that I think, it's a lot what I think about. I definitely, funds will definitely get bigger, both Super Angel and Global in their fund twos. Like I think that will be delivered track record, DPI.
Yeah, natural progression.
That's natural progression. And so I think you can't afford not to. I think what your point about that middle stage is really important, and actually finding that right size that allows you to continue to deliver. But I think you can go bigger than like 20, 30 mil to achieve that. So I think definitely bigger in terms of fund sizes. I think also we're starting to do a lot more on the co-investment side for our investors as well. And we've got like some really, really good allocations into things for them as well, beyond just even, the fund side. So I want to continue to, build value. Essentially, we're creating value on both sides, right? And so that's essentially, that's how I think about what we do. I definitely see us having a bigger platform play and a bigger proposition beyond even what we have now. And I think I expect us to, grow pretty significantly in AUM kind of over the next 5 years. So
I have one last question on this as well, actually, because again, it's really important, right? Like, so when I started this podcast, part of the reason I started the podcast was the other sort of media assets within this space were quite kind of monochromatic, were, pretty much sort of the same 40-year-old man, sitting across the table. And so this podcast has typically been 40% female, 40% minority ethnic, but isn't a diversity podcast. It's just that, I wanted to make sure that we represent the ecosystem I feel like I'm part of and that I want to see. And by the way, you were the first person I ever interviewed. I was talking to you as you came in before I turned this whole thing into a podcast. So it's really quite a moment for me to have you come back in. But you are one of very few solo female GPs in Europe, for sure, right? If not globally. Just talk me through how that's been and whether you think that's had an impact on how you've thought about things, or is it just business as usual?
Yeah, look, great question. I mean, I do have a partner in Global Fund,
Apologies.
but no, but you're right. I founded the firm and so on, but I have a brilliant partner called Mithil in our Global Fund. But I think look, it's one of those questions. It's like, yes, there were things, I'm sure. Who knows what size of fund might have been if it was something else. But, at the same time, like, I just think it's been an incredible journey, like, personal growth, going out to fundraise as a solo GP with a deck and an idea and
young kids, I think, right?
Yeah, I have a 3-year-old at home, incredible 3-year-old. Going, which is also one of the best things about this is having, doing that at the same time and also thinking about what I want for him in his journey as well. But I think, yes, there are, I remember one of my first fundraising conversations, I got asked by the prospective investor about how was I going to manage my family and my fund at the same time and things like that. So I'm sure there is, like, there are those things, but I try and just focus on the opportunity, and the opportunity is huge because venture is a power law game. It's about seeing something that other people don't see. Now, how can you see something that other people don't see if you all have exactly the same outlook?
100%.
I believe, like, anyone can be, and that's also why democratizing access to the asset class is so important, because anyone can be an investor. Most people think because they didn't come from finance or because they didn't come from a traditional background. I actually think that seeing more and more doctors come on our courses has been one of the most exciting things for me, because who do I want to look at health tech businesses with, right? Like, whose opinion do I want in that case? Or what is it that I can't bring that they can, and things like that. So I actually think coming from diverse background of thinking, I'm not talking about gender here, I'm talking about like just having a different, experience. And, you yourself said that, I didn't even know the number was so low of operator-led funds in UK, Europe, but, there is an element of empathy. I get it. Like, I can feel it when some of our when the founder's having a bad day, or we've all had them. We've had the highest highs, the lowest lows, all in the same week, wrapped up together. And then you're expected to show a happy face to your employees, to your customers, to your investors, and the rest of the world. We've all done it. We know what it's like. And so coming from that lens, and then coming from a lens of, okay, I see some opportunities differently. And I'm not saying it's even a gender thing. I think each of us will see something based on our own lived experience, because that's what we then project into our own, opportunities. And so I really truly believe it's a strength, and I'm really looking forward to seeing that play out with the numbers as well, like behind it. But I think, and the only way you can do that is, like you said, waiting for those returns to show.
You're gonna get those returns.
But I just think that there is so much opportunity, and there are so many incredible founding teams building right now that it's, there is the market's way bigger than anyone ever even probably imagined like 5 years ago. And so there is room for everyone, and there's opportunity for everyone, and you don't have to be one of the big funds to be able to provide outlier returns. So I think it's a really exciting time.
I buy into that. And actually the thing that's really exciting for me is, if I look back, 5-6 years ago, or let's say mid 2010s to early 2020s, you had B2B SaaS was obviously the big, everyone was investing in B2B software, right? And I found it really boring. Like, if I'm super honest, like, I was like, okay, this is a spreadsheet with a front end, right? Like, there was some really interesting stuff, of course, right? But there was equally just a lot of stuff where I was like, why does this exist? Why does this need to be, like, this isn't solving anything. It's just making something look pretty. Whereas today, to your point about the stuff that is being built, like it is actually consequential. And where I'm seeing, VC money being deployed, it is in really R&D intensive businesses that actually do move the needle. You talked about it with the health tech business. Earlier, it is stuff that, does require thought and thoughtfulness in terms of building, but equally, it's an opportunity that potentially didn't even exist, right? Like 3, 4, 5 years ago. But now it does. And therefore the world has just opened up to all sorts of new things. And as you say, as an investor, that opportunity is incredible. I want to finish off with 2 questions we ask all of our guests. So firstly, what is one thing that you have a contrarian conviction about from any area of life, whether that's work, politics, socially, or at home?
If I had my way, or if I didn't work, I would want my son to be homeschooled. I don't think the education system is catching up quickly enough with what a 3-year-old is going to be needing by the time he's, I would say graduating from university, but I'm not even sure he'll need to be going to university. So, I think I have quite a strong opinion on what the education system needs to do.
You are not the only one. So I fully agree. And I would say I have a 25 and an 18-year-old. Like I'd even say now, like, I don't know what life will look like for them, right? In 5-10 years. Equally, I should be getting on the podcast relatively soon, Anand Sanwal, who's the founder of CB Insights, but he's now built Forge Prep to address exactly this question, right? Like, which is basically school is, the education system rather was built for the industrial age. It really is not fit for purpose today. So if you are able to homeschool your son, absolutely, I would do it, right? Like focus on the things that are important rather than, what river flows through Shanghai on a, on a dusty day. I think it's super important. And finally, although I think we probably have gotten to know the real you, so we can get to know the real you, what is something that moves you emotionally?
I think the world's always been separated. I just think that we are seeing it more than ever before, or divided. And I guess what moves me is that we sitting here in such a place of privilege on so many levels, from the country we live in to to our upbringings, to the fact that we're even able to be in this industry or have, this career. What I find very difficult is to see the children that actually get impacted by decisions that are completely out of their control, just because of where they were born. I think that's something that I struggle to reconcile that.
Yeah.
And I think, having a child, you see it, how fortunate and, grateful we are, but how, knowing that he's safe every night. And I can't imagine as a mother not knowing that. And I think that that's very difficult as a mother.
Amazing. Rupa, it's been absolutely incredible having you here. Thank you so much for joining me. For our listeners and our audience, where can they find you online? Are you on LinkedIn? Are you on X?
I'm everywhere. LinkedIn, and I'm soon going to be on YouTube and as well. So watch out for that.
We will. Well, if it's soon enough, send us the links and we'll make sure we include that in the show notes. But
thank you.
For the time being, thank you so much for joining me.
Thank you so much for having me.
It's been an absolute pleasure.